Okay, are we there? Are we still there? You can tell Mwalimu if we are there. Can you hear Mwalimu? Okay, can we proceed now? Okay, thank you very much. I can see you are there. We can now proceed. I was asking a question that, like in this scenario, for example, we disposed of this subsidiary on 1st of April. We are ending the year on that in June. This disposed subsidiary, if I was to consolidate in the income statement, that was my question. How many months am I going to consolidate this subsidiary? Thank you very much, Ruth. Remember, it was a subsidiary from 1st of July up to 1st of April. Therefore, I will count July, August, September, October, November, December, January, February, March. 1, 2, 3, 4, 5, 6, 7, 8, 9. Therefore, I will consolidate 9 over 12. This month, it is no longer a subsidiary. It's no longer a subsidiary. It has become associate. The 3 months of prudence, it has become associate. Therefore, we are not going to consolidate. We disposed of 60%. Therefore, we remain with 40%. 40% is an associate now. Therefore, if I'm to consolidate in the income statement, I consolidate 9 months, but not 3 months. 3 months, it is associate. It is associate. Therefore, you count the month it was a subsidiary. The month it was a subsidiary, not the month after disposal. I believe that one is clear. I believe that one is clear. Then after that, we come to look for goodwill. Examiner wanted us to compute goodwill in this subsidiary. Now that we know that it is an associate at the end of the year of 40%. Therefore, in the balance sheet, you don't consolidate that company in the balance sheet. Why? Because it's no longer a subsidiary. It is no longer a subsidiary. Therefore, what we do, we don't consolidate in the balance sheet. That is that limited. But now, let's compute, you say, wait, I'm waiting. Now, let's look for goodwill. Goodwill in these subsidiaries. Let's look for goodwill in these subsidiaries. How do we compute goodwill? We take purchase, we start with goodwill in Pamba Limited. Goodwill in Pamba Limited. You take your purchase consideration. Purchase consideration was how much? Purchase consideration was 85. 8,500. That is 12. That is 1250 times 6.8. You get 85. That is our purchase consideration. Florence, you say unmute. Be quick, Florence, be quick, so that we move faster.
Thank you, Mwalimu. A quick one. You've mentioned on the date of consolidation. So, Pareto acquired Pamba on 1st October 2020. Then, at the date of acquisition, that was 1st April 2021. That is the date of acquisition. So, I'm asking, how is 9 months coming in here? Is it as from 1st October 2020 to 30th June 2021, or as from 1st October 2020 to 1st April 2021?
Now, which company are we disposing? Which company are we disposing of? Yes, we are disposing of not Pamba Florence. We are not disposing of Pamba Limited. Read note number 4, note number 4 in our question. You will find that we are disposing of DAF Limited, which we acquired several years ago. Therefore, that one, we are not disposing of Pamba. Pamba is what we acquired on 1st October. We are disposing of that limited, which we acquired 100%. Therefore, if we acquired very many years ago, it means that our year was full. Our year was full. But if we are disposing of Pamba Limited, that is when you can calculate. And even if it was Pamba Limited, we acquired it on 1st of October. Therefore, we count October, November, December, January, February, March. If it was Pamba Limited, it was 1, 2, 3, 4, 5, 6. If it was Pamba Limited. If it was Pamba Limited, listen very carefully. If I disposed of Pamba Limited, I acquired on 1st October. If it was Pamba Limited, in this case, it's not Pamba Limited. But Marim is just giving you a scenario because of your concern. Then I will count 1st of November, therefore, 1st of October, therefore it is October, November, December, January, February, March. We disposed of 1st of January. Therefore, it is 6 months if it was Pamba Limited. But in this case, it is DAF Limited. Remember, DAF Limited, we acquired many years ago. Therefore, during our year is 1st July 2020 up to 30th June 2021. That is 12 months. But remember, we disposed of on 1st April. Check on this structure. How is it 9 months? How is it 9 months for us? You can even put here the counting. Like a grade 1 student or a class 1 student, I put here fingers. 1, 2, 3, 4. Because we start the year on 1st of what? July. On 1st of July. Up to 1st of April, that is that first March. We end March. Thereby said, what July, August, September, October, November, December, January, February, March. When you count this 1, 2, 3, 4, 5, 6, 7, 8, 9, 9 months, then you are asking, how is it 9 months? You count this one, what Marim is counting there, you find how many months there. Let's go to the goodwill. Goodwill. Purchase consideration there. We add fair value NCI. We add fair value NCI. We were told that the fair value of NCI, it was 21.25. 21.25. Therefore, total is 5, 2, 6, 10, 6, 25. That is total 10, 6, 25. That is total 10, 6, 25. Then we come to less total net assets. Total net assets acquired. We come to less total net assets acquired. What are our net assets? Ordinary share capital. Ordinary share capital. What was ordinary share capital in Pamba Limited? 2,500. Share premium. Share premium. What is our share premium in Pamba Limited? 1,000. Pre-acquisition profit. Pre-acquisition profit. How much is our pre-acquisition profit in Pamba Limited? Note number 1 saying that the profit was 35. 35. The profit was 35. Then also in note number 1, there is fair value adjustment. Fair value adjustment. Fair value adjustment. Fair value adjustment. In note number 1, at acquisition, the only adjustment required to identify net assets of Pamba Limited was for land which had a carrying amount of 625. Therefore, we add 625 there. Those are our net assets that we acquired. Net assets that we acquired. Total, we come to subtract their total. We add total, we subtract. Who can give us total there? 7625. Thank you very much, Ruth. Ruth says 7625. 7625. Then what will be our goodwill in Bamba Limited? Goodwill in Bamba Limited. Goodwill. $3,000. Goodwill is 3,000. That is goodwill, 3,000. Goodwill, 3,000. Then we come to goodwill in DAF Limited. Goodwill, DAF Limited. Remember, DAF Limited was 100% subsidiary. DAF Limited was 100% subsidiary. Therefore, there is no NCI. Listen very carefully. Goodwill in acquisition of DAF Limited was 100%. Therefore, there is no what? NCI there. Therefore, I will take purchase consideration. Purchase consideration. My purchase consideration, my good friends. Purchase consideration in note number 3 was 5750. 5750. That's the cost of investment. 5750. Then I come to less net assets acquired. I come to less net assets acquired. That is ordinary share capital. I come to less net assets acquired. The examiner says Pareto Limited had acquired 100% equity in DAF Limited a number of years ago when the retained earnings was 1750. Therefore, ordinary share capital from the balance sheet, 2,000. Share premium, 500. Pre-acquisition profit, 1750. There is no fair value adjustment in that company. There is no fair value adjustment. We are doing goodwill. I can see TechnoSpark joining there. We are doing goodwill in the question of December 2021, disposal of shares in the subsidiary. Therefore, you give me total so that we get our, quickly you give me total. $4,250. $4,250 were the net assets on acquisition. $4,250 were the net assets on acquisition. Therefore, what will be the goodwill? What will be the goodwill? $1,500. Goodwill was 1,500. Goodwill was 1,500. That is the goodwill in DAF Limited. The goodwill in DAF Limited. Examiner wanted that goodwill in requirement number 1 to give you 4 marks. Examiner wanted that to give you 4 marks. Techno, kindly, you can put off your video so that you give others humble environment. TechnoSpark 5, you can put off the video. You can put off your video, kindly, Techno. TechnoSpark, I can see you. Put off the video, kindly. Florence, you say, why was it full? Why was it full? Because it was 100% subsidiary. 100% subsidiary. If it was 100% subsidiary, then it was full. If it was 100% subsidiary, then it was full. There was no NCI there. There was no NCI. I acquired a company, but full, 100%. If it was 100%, let me ask you a question, Florence. How much was NCI? How much was NCI? Because NCI is the part of the shares that remains unacquired. Therefore, it was full subsidiary. It was a full acquired subsidiary, 100%. Therefore, that is what the examiner wanted there to give you how many marks? To give you 4 marks. Now, let's go to the requirement of gain or loss. Let's go to the requirement of gain or loss. 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 Number one, gain to be recognized by the parent. Gain to be recognized by the parent. Gain to be recognized by the parent there. Gain to be recognized by the parent. How do we get the gain to be recognized by the parent in its individual financial statement? How do you get that? We take the cash proceeds. Cash proceeds. You come to less cost of investment. Cost of investment. Then we get the gain. You take your cash proceeds, you come to less the cost of investment. Therefore, on sale of DAF Limited, how much did we receive in note number 4? How much cash did we receive in note number 4? How much cash did we receive in note number 4? Techno, kindly you put off the video or I remove you in the, I remove you. Kindly you put off the video or I remove you, kindly. Techno. You put off the video or I remove you, kindly. Thank you. I was going to remove you, Techno, but you did well. I was going to remove you, then kindly you put off the video. You put off the video so that you give others ample time. Now, how much did we receive in note number 4 on sale of this subsidy? I want us to move together kindly. How much do we receive in note number 4? The examiner says Pareto Limited disposed of 60% of its investment in DAF Limited on 1st April 2021 for Kenya shillings 4.7. Therefore, we received 47. That is the amount we received, the cash proceeds on disposal of the subsidiary. Then we come to less the cost of investment. How much did we invest in this subsidiary? How much did we invest in the subsidiary? How much? Remember, we invested 57.50. We invested 57.50 cost of investment, but we only disposed of 60% out of 100. We disposed of 60% of the investment. Out of 100, we disposed of 60%. Therefore, how much did we dispose of? It is 60% times that 450. We disposed of that 450. We disposed of that 450. Therefore, how much is the gain? How much is the gain? The gain is 1250. That is the gain to be recognized by the parent in its individual financial statement as stated there in the question. Gain, individual financial statement of Pareto. This is the gain. You take how much you receive minus how much did you dispose of. Cost of investment you disposed of. Then we go to the gain number 2. Gain number 2. The gain to be recognized in the group. Gain or loss to be recognized in the group or to be consolidated. Gain or loss to be recognized in the group or to be consolidated. Here we are going to take the cash proceeds, of which it is 4,700. 47. Then we come to add fair value of the remaining investment. Remaining investment. We come to less the fair value of the remaining investment. Now, Florence, can you read for us note number 4? Can you read for us note number 4 to see if there was any fair value of the remaining investment? We know that the investment that is remaining is 5750 times 40%. But examiner in note number 4 gave us the fair value. Gave us the fair value. The fair value of the remaining investment in 40% equity interest was 43. 43. There I come to add 43 there. I come to add 43. I get 0, 9,000. Total is 9. Total is 9. Then we come to less identifiable net asset. Identifiable net assets. Identifiable net assets. Now, in same note number 4, examiner told us that at the date of disposal, the identifiable net assets were 6250. 6250. In note number 4, when we disposed of the identifiable net assets, remember on acquisition, the net assets on acquisition were 4250. But on disposal, the examiner says that the identifiable net assets were 6250. That is what we less. Identifiable net assets. Then we come also to less unimpaired goodwill. Unimpaired good. Unimpaired goodwill is this goodwill in DAF Limited. The goodwill in DAF Limited, which is 1,500. 1,500. Which is 1,500. Therefore, how much is the gain or loss? Let me do it for you. Because I know you will be doing yourself in an exam, you should save energy for now. You save energy for now for the 22nd of April. Therefore, let me do it for you. 9,000 minus 6250 minus 1,500. 1250. 1250. That is the gain to be consolidated in the group. The gain to be consolidated in the group. That's how you get it. You take your cash proceeds, you add any fair value of the main investment, you less the net asset. In this case, examiner just gave us the identifiable net assets of 6250. Then we less the unimpaired goodwill. Unimpaired goodwill. Now, the Florence you are asking, does it mean that the one that was disposed, it was unimpaired? Yes, we are saying unimpaired. Suppose we have impairment loss. Impairment. Suppose we have impairment loss of, let me say impairment loss of 10%. Impairment loss, let me assume it was 10%. Therefore, if impairment loss was 10%, then I take 1,500 times 10%, which is 150. Therefore, how much is the unimpaired goodwill? Unimpaired goodwill will be 1,500 minus 150, which is 13 what? 1350. But in this case, there was no impairment. There was no impairment, therefore total was unimpaired goodwill. But if there was impairment, I take this goodwill minus the impairment, I get the unimpaired goodwill. I get the unimpaired goodwill there. Now, that is how we get that item. Now, let's consolidate now. But before we consolidate, let's calculate the investment in associate. Now that this company is an associate, Let me compute the investment in associate. Investment in associate. Let's compute investment in associate, because now DAF Limited is an associate. How do you get investment in associate? You get the cost of investment. You take the cost of investment. Then you come to add group share of post acquisition profits. You come to add, then you less impairment loss in that associate. You come to less impairment, you also come to less UPS on closing stock, UPS on closing stock. Then we get investment in what? In associate. Therefore, in this case, my good friends, Edwin, is it coincidence for gain in the parent and in the group to be equal, or it must be equal? It's just a coincidence. Thank you very much. It's just a coincidence that it is equal. This one and this one is just a coincidence that they are equal, but in many circumstances, it will not be equal. It's just a coincidence that the gain on the parent and the gain in this one is equal. Now, investment in associate. Investment in associate, we are going to take the cost of investment. Now, our cost of investment, listen very carefully here. The cost of investment is the fair value of the remaining investment. Cost of investment is the fair value of the remaining what? Investment, which is 43. 43 is the fair value of the remaining investment. Therefore, in that associate, we are going to recognize that as our cost of investment. Then I come to add group share of post-acquisition profits. Group share of post-acquisition profits. Let me give you the group share post-acquisition profit. Post-acquisition profit in DAF Limited. Post-acquisition. Now, listen to this, because I know you might fail to understand it if you don't listen very well. Now, at the point of disposal, net assets at disposal was 62.50. Those were the net assets at disposal of this subsidiary. At the balance sheet, at the end of year, when you take net assets at the end of the year in the balance sheet, net assets at the end of the year in the balance sheet, it is 82.50. It is 82.50 at the end of the year. Therefore, it means that from the date of disposal to the balance sheet date, there was post-acquisition profit in that associate. Therefore, I will take 82.50 minus 62.50. I get 2,000 there. That 2,000 is what we are calling post-acquisition profit in the associate. Post-acquisition profit in the associate. Therefore, I will take 40% of that. I will take 40% of that, which is 800. Which is 800. 40% of that, which is 800. These other items are not there. Therefore, you give me, that is 51. That is 51. Investment in associate is 51. Investment in associate is 51. Post-acquisition. Remember, where am I getting post-acquisition? When we disposed of this subsidiary, the net assets was 62.50 from note number 4. When we take in the balance sheet, ordinary share capital, share premium, retained earnings, it is coming to 82.50. Therefore, it means that I'm getting this in the balance sheet, where we have ordinary share capital, share premium, profit, total net assets, 82.50. Now, when I compare the net assets on disposal, it was 62.50. The difference is 2,000. That 2,000 is what we are calling post-acquisition profit. Let's now do the balance sheet. Let's quickly do the balance sheet. Let's now quickly do the balance sheet. Let's do the balance sheet. We say Pareto Limited Group consolidated statement of financial position as at 30th June 2021. Consolidated statement of financial position as at 30th June 2021. Currency shillings in millions. I come to non-current assets. Non-current assets. I come to non-current assets. Non-current assets. Now we are going to consolidate Pareto PPE. PPE, I'm going to take 14,900 plus the PPE of 9250. 9250 plus 625 fair value adjustment. 625 is the fair value adjustment. Fair value adjustment, 625. We always add to the PPE. There was no depreciation. It is not a depreciable item. Land is not depreciable. Land always increases in value. Therefore, you give me the total there. You give me total. Then I come to goodwill. My goodwill in Pamba Limited was 3,000. Forget about DAF Limited. DAF was disposed of. Pamba Limited. Pamba Limited, 3,000. Then investment in associate. In associate, we have 51. Investment in associate, we have 51. Then from the balance sheet, we have financial assets. We just add that one plus 28, 59. Then you give me total assets there. You give me total assets. I believe you are adding up the PPE. I believe you are adding up the PPE, or if you wish, you can put XX as Malingu. There's no harm, there's no problem. But the problem is on your side when you are revising, because you wonder, what is this XX? What is this XX? Then we come to current assets. Current assets. My current assets, I'm just adding Pareto and Pamba. That is no longer a subsidiary. That 850 plus 4425. Current assets, you put it there. Current assets, you just add literally. Consolidation is to add. Then we have cash on disposal of DAF Limited. Remember, the examiner said that we have not accounted for that disposal. Therefore, it means that the cash of 4,700, we have not accounted for it. Cash on disposal of DAF Limited, we have not accounted for the disposal, which means the cash, we did not account for it. Then, this is not total assets, kindly, this is not total assets. This is not total assets. Total assets comes here. Total assets. Total assets. This is just non-current assets. Cash on disposal, note number 4. Examiner said we have not accounted for the disposal, which means we have not accounted for our cash. Then we go to capital and reserves. Capital and reserves. Ordinary share capital. Parent only. This one always parent only. Parent only is 10,000. Share premium. Parent only. Parent only share premium, 5,000. Retained earnings. This one we have not done it. I say that we do it as our last working always. Always you do it as the last working. Non-controlling interest. Non-controlling interest, we have not done it. We shall do it as the last option. Because sometimes it takes time, but you find that it's wrong to a student. Therefore, if you waste time to calculating it, you might miss some free marks somewhere. Remember, like this one, we are just doing addition. But when we come to retained earnings, we need the working. Then we come to non-current liabilities. Non-current liabilities. Non-current liabilities is 85 plus 6. 85 plus 6. That one I'll do it for you. 14,500. 14,500 non-current liabilities. Non-current liabilities. Then we come to current liabilities. Current liabilities is 47 plus 1725. Then you give me total equity and liabilities. But because we don't have the retained earnings and NCI, you cannot give me that item. We are going to calculate the NCI and the retained earnings as our last working, because always Marim says you do it as the last working. You do it as the last working. Even in an exam, just remember what Marim was saying. You do it as the last working. Now, non-controlling interest in Pamba Limited. Let's see. Non-controlling interest. Interest in Pamba. Remember, in TAF Limited, there's no NCI because we disposed of. We have associate of which we have already recognized. We have associate of which we have already recognized there. Now, here, we take fair value at acquisition, fair value of NCI at acquisition. How much was it? Fair value of NCI, 25. That is fair value on acquisition. Then we come to add NCI share of post acquisition profit. NCI share of post acquisition profit in the Pamba Limited. Who can give us post acquisition profit in Pamba Limited? Who can give us? Just a good Samaritan. Just a good Samaritan to give us post acquisition profit in Pamba Limited. Who is a good Samaritan? I'm giving you 1 minute. 1 minute. A good Samaritan. A good Samaritan. 5250, thank you, Florence. 5250. Now, when you take 5250 in the balance sheet, total profit in the balance sheet, total profit equals to 5250. Pre-acquisition profit equals to 35. Therefore, post-acquisition is the difference. Post-acquisition is the difference. Post-acquisition is the difference. Total profit is 5250 from the balance sheet. Pre-acquisition profit is 3500. Therefore, 5250 minus 3500, I'm getting 17 what? 1750. Out of that 1750, NCI share. NCI is 20%. Therefore, I will take 20% times 1750. Times 1750. 350. Then I add I get 2475. I get 2475 there. I get 2475. Therefore, I come to report here 2475. I come to report there 2475. Then I come to balance. Consolidated retained earnings. Consolidated retained earnings. I come to consolidated retained earnings. Consolidated retained earnings. This one you take 100% profit of the parent. 100% profit of the parent, of which from the balance sheet, it is 78.25. 78.25. 100% profit of the parent. You come to add group share. Group share of costs, acquisition profit in the subsidiary. In this case, we have two subsidiaries. We have Pamba when it's a subsidiary. Then we have Dafu when it was a subsidiary. We have two subsidiaries. We have Pamba when it was a subsidiary, whereas Pamba subsidiary, then Dafu subsidiary. Therefore, Pamba, we are going to take 5250 minus 35. Already we have done it. We get 1750 times 80%. Times 80% post-acquisition profit. Already we did that in the NCI. 52 minus 35. Therefore, I get 1750 times 0.8. I'm getting 1400. I come to add 1400 there. 1400 there. When Pamba is a subsidiary, 1400. What about DAF when it was a subsidiary? DAF Limited when it was a subsidiary. DAF Limited. Now in DAF Limited, remember, net assets of DAF Limited at acquisition was 4250. Net assets at acquisition, the net assets for goodwill Kindly listen carefully there. The net assets for goodwill in DAF Limited. When you check on goodwill, net assets in DAF Limited were 4250. Kindly don't ask me where are you getting 4250. Check where we computed goodwill in DAF Limited. Ordinary share capital, share premium, pre-acquisition profit. Total was 4250. Then net assets at disposal. Net assets at disposal. When you read it was 6250. 6250. It was 6250. Then when I take 6250 minus 4250, I get 2000. Therefore, it was 100%. Therefore, here I'm taking 6250 minus 4250 net assets. I get 2000. Therefore, it means that DAF Limited, it was 2000 when it was a subsidiary. Then I also come to add DAF Limited associate. DAF Limited associate. When it is associate, how much is the profit? We already did that when we were looking for investment in associate. DAF Limited, when it was associate. When it was associate. Already we did that. Where? Already we did that when it was associate. When it was associate, where we took 8250 minus 6250, already I explained. Whatever I get times 40%, we got 800. That is for sufficient profit in DAF Limited when it was associate. But when it was a subsidiary, it is 6250 minus 4250. We are comparing the net assets. Net assets at acquisition, net assets at disposal, net assets at disposal, net assets at the year end. Then we subtract, we get post. Because what is increasing this net assets? Like for example, from 42 to 6250, what is increasing? We never issued ordinary share capital. Therefore, it is the profit. Then we come to add gain on disposal. Gain on disposal. Gain on disposal was 1250. They want to consolidate. The gain on disposal, they want to consolidate was 1250. That's why my good friend Edwin was asking, is it a coincidence or is it always? It was just a coincidence. Gain on disposal, you add. Those are the net assets, are the profits in that company. Therefore, I take 7825 plus 1400 plus 2000 plus 800 plus 1250. I'm getting 13,275. 13,275. Then I put it here 13,275. 13,275. Then that marks the end of that balance sheet. That marks the end of that balance sheet. That marks the end of that balance sheet. Therefore, in this item, always do it the last, especially the consolidated, the NCI is easy. But this one is sometimes a challenging item. Therefore, that's why Marin is saying, do the balance sheet. That one, do it as the last option. That one, do it as the last option. Florence, what do you want again? Florence, what are you? Unmute. Let me unmute you. We see you. We listen to you. Okay, ask quickly, Florence.
Mwalimu.
I'm listening.
Sorry. I'm saying, uko nyuma, there's a question that I did. Then I was told goodwill is 10%. After step one, you have to do group structure. The second step is you calculate for the goodwill. I'm now talking for just a normal group without disposal, without the step the one that you did on Saturday. So I'm asking, if I have been given impairment of goodwill as 10%,
Yes.
where do I take that impairment loss? Is it to the retained earning, NCI, or where?
Now, the retained earnings, for example, I'm preparing this profit. I'm preparing this profit. There was impairment. Therefore, I'm coming to subtract the impairment loss. I come to less impairment loss, It's an expense, therefore we less impairment here. In the retained earnings, we less impairment loss. Then also in our goodwill, let me assume this goodwill of 3,000 was impaired at some point. I will take, for example, if it was 10%, I will take 3,000 times 10%, which is 300, Now, for me to report here, I will take 3,000 minus 300 impairment. I report 27. Impairment, you less from goodwill, then you also less from the retained earnings. You less from the retained earnings there. I believe that one is sorted. I believe it is sorted, but in this question, there was no impairment. Therefore, I believe now we are done with disposal of shares. On Friday, we do foreign subsidiaries. Then we are done with group accounts. On Friday, we are going to discuss foreign subsidiaries called willing. Therefore, keep on revising the way Florence is doing great job. Thank you very much, Florence. You are doing a great job. I want everybody to emulate you because FR wants a lot of revision. You do a lot of questions. Where you find it difficult, you consult Mwalimu because we are here for you. Thank you very much. Let's meet on Friday, God willing. Bye-bye.